Hello everyone, dear friends, this is the Max Cash team. As always, before starting the video, I recommend that you join my Telegram channel, where you will find everything you have been looking for. The link to my Telegram channel is located below this video and in the pinned comment. I am going to show you a few of my trades that my team and I open on our Telegram channel, and this is just a small part of what you see. My team and I make more than 20 trades per day. When we open the charts, the first thing we need to understand is what is happening in the market. What is the market state? The success of your trading system depends on the answer to this critical question. I haven't come across a magic system that works for all market conditions. To know which tool to use and how to use it, you need to understand exactly what market conditions it is designed for. Different market mechanisms operate in trending and consolidating markets. Adapting to these mechanisms is a challenge that every trader must face before investing their hard-earned money. This is why trend lines and channels are used in trending markets, and support, resistance, pivot points, and other tools are so useful in sideways markets. Strictly speaking, there are only three market states: upward trend, downward trend, consolidation. A trending market always moves in one direction. The price moves up and down, but the overall direction remains unchanged. Any price movement against the overall trend is simply a retracement. You already know the simplest and most effective tool for identifying a trend. These are trend lines. A market that has a trend always moves in the same direction. The price moves up and down, but the overall direction remains the same. Any movement of the price against the overall trend is simply a pullback. You already know the simplest and most effective tool for identifying a trend. These are trend lines. Pullback or reversal. A very popular and relevant question is how to actually distinguish whether it is a market reversal or a temporary pullback, after which the trend will continue. Here is how. It looks like the price has turned around, so it has time to buy. But no, it has just a reversal against the trend. It has a microwave within a larger wave. As we know from Taoist theory, trends always follow a wave-like pattern. Therefore, we need to be able to determine the continuation of a trend from its reversal. A pullback, also known as a correction or retracement, is a temporary movement of the price against the overall trend. In fact, the entire price of any asset in the world is always a history of trends and pullbacks. On the other hand, a reversal occurs when an upward trend changes to a downward trend or vice versa. A reversal looks like this. Unfortunately, there is no 100 method to distinguish between reversals and pullbacks, which would make trading much easier. However, with experience and the use of various techniques, you can learn to identify and handle them. To avoid losing money when a retracement is incorrectly classified as a reversal, remember the basics. Risk and money management will save your wallets. Or just join my Telegram channel, where your trading will be safer and more reliable. I wish you all successful trading and success.